Hi, and welcome to the Market Alert for Friday, the 11th of February 2022. For those of you that are new to the Market Alert, welcome aboard. You joined us at a very interesting time as the financial markets are taking on board CPI at 7%. It should actually be 12% if you look at John Williams' shadow stats. Way much higher, but of course the manipulation of the numbers is something that we've seen for a long time. But that said, 10-year yields above 2% yesterday, and now this is causing all sorts of mayhem. I think this headline really sums up where we are. The crapification of the US economy is now complete. The only thing left is the tiresome waiting for the implosion of the entire travesty of a mockery of a sham. Couldn't have said it better myself. This is from years of manipulation, QE, printing, debt, and painting themselves into a corner. And now with hyperinflation, which for me I think is intentional to a degree. It's the last chance saloon for them to actually try and inflate the debt away. It doesn't matter about how it affects the people or the masses. It's all about saving the markets for the elite. So that was the start of it yesterday. Markets pricing in rate cuts as hot CPI confirms Fed policy error imminent. Well, it might be an error, but it's exactly what they want to do. They want to crash the system. Food, energy, and used car prices were the biggest drivers. That was for yesterday. But then later on in the afternoon, Bullard came out, opened his mouth, and said soaring CPI has increased rate hike odds. They're exploding. And if we look at this, another one, stocks tumble after Fed's Bullard urges 50 basis point rate increase, suggests inter-meeting hike. So that's an interesting one, isn't it? So there are whispers of an emergency Fed rate hike as soon as tomorrow. Obviously, tomorrow is today. I'm plugging in the numbers. A 13 basis point in the Fed contract means that there is now a 30% chance of an emergency rate hike. Whether that happens or not, who knows? But that's what's being spoken of. Meanwhile, in the Far East, China has quietly injected $1 trillion in its biggest monthly credit surge on record. China's mind-blowing credit dynamo is back with a bang. And Bank of Japan offers to buy unlimited 10-year Japanese government bonds to contain bond rout. So the Bank of Japan sent a strong message to markets of its resolve to curb any rise in yield above 0.25%. Amazing, isn't it? Absolutely amazing. They're still doing the same crap and going to get the same result. Anyway, news for today. There's only a couple out today. We've got prelim GDP from the UK, 7 a.m. forecast at 1.1, previous 1.1. That's no great shakes, is it? And then prelim UM consumer sentiment for the US, also forecast and previous, exactly the same number. Meanwhile, in the metals markets, you can see the gold-silver ratio moving to the upside, which means silver's being hammered on the overnight, which it is at the moment, and also gold is holding steadier. So it looks like we're heading back up to the 81 level for the gold-silver ratio. That means 80 pieces of silver for 1 ounce of gold. So let's have a look at the markets, and we'll kick off with the Dow. You can see yesterday the market up and then slammed to the downside. So, say up, it wasn't up a lot. You can see there it opened and moved lower. I'm just not quite sure about that. Let me just have check the details in this. Oh, that's right. It is right. Yeah, I thought it looked a bit slightly odd. I thought we'd moved up a bit yesterday morning, but not at all. We'd gone to the previous day's high, and then prices opened. Well, we had the news first. They brought the market back, and you can see here prices coming back to 89% there, bang on 89, and then moving the market low. We also had another retracement here. This is when Bullard spoke, and that sent the market to the downside there. So, yeah, the Dow moving down. It's got to hold above that 200 MA. If it doesn't do that, then we're going a lot lower. And given the backdrop of what's going on at the moment, it's going to need to be the case as well. If we get the increase in rates today, unexpectedly. Emergency one, that's going to spiral the market to the downside as well, because obviously there's less risk in having the money in the, well, less risk having money in the bank. That's a joke, isn't it? But there's less risk of losing money, I suppose, is the term, than in the stock market, because obviously if it continued to crater to the downside, you're going to lose more. So that's the old way of looking at things. These days, anything can happen, as we know. So 89% is the first downside target. That's where we're currently at. It's got to bounce off here if it's going to move to the upside. If not, then we're going to start be looking at these sort of numbers on the downside. It's a bit of a tricky one, actually, when you get sort of news saying that there's going to be an emergency meeting. For me, 30% chance. I think it's a lot less than that. I can't see the Fed wanting to do that. I may eat those words by Monday, but it will be interesting for certain if they do that, because it's going to be the first time for years since they've done anything like that. So that was the 30-minute chart of the Dow, and into the German DAX. We can see this at the moment is bouncing a bit off the 62% retracement. Needs to close back above the 5-bar moving average and stay above there and head towards the 20-bar as well, if it can do. But we'll have to wait and see what the futures do when they open. The market's certainly waiting for this at the moment. In the 30-minute chart, we moved up to begin with in yesterday's DAX session, which is why I was getting confused with the Dow, because I knew that it had taken out the previous day's high, which it had. And then, of course, we've got the retracement back. We've got divergence. We're overbought in both these cases where the market came back. Then we had the Dow moving up. And then once Bullard spoke, it sent us back down to yesterday's low. And that's what the market's coming back to have a look at the moment. It doesn't like to close below or trade below the previous day's low if it can help it, especially with it being a long-term bull market. See if it's got the strength to do it. But again, let me just go back to the daily chart. And yeah, we certainly got plenty of potential on the downside. Just looking to see where we are. On the upside is that 20-bar moving average in the way. I can't draw in anything on the upside, but I can see the 20-bar, and I could work out visually from many years of looking at this where there would be some sort of resistance. But the market's stopping previously at 78% and then 62% there as well. So an interesting price action going on in the DAX at the moment. In the metals markets, as I said earlier, these at the moment are being moved to the downside. Yesterday, silver moving up to the 62% retracement, and then they decided to sell into this, which is odd really, given the fact that if we have a look at the dollar, it sold off right down to 78, and as soon as Bullard opened his mouth, that's what sparked the selling in the metals market, and it brought the dollar back. It's just, again, manipulation. A rate increase is good for the currency, and that's exactly what you see in there. So expect the metals to be hammered today to the downside. If you look at the 30-minute, you'll see what they did with silver. It was moving up with the inflation numbers quite nicely, became overbought, crossover in stochastics, and then it was just hammered to the downside. No surprise whatsoever for anybody who's been following the market alert for a long time. This is the game they're playing, and this is going to continue as well for some time until the system starts to really fall apart. Then the only safe haven is going to be looking at the sort of metals. So Brent also sideways at the moment. There's still a lot of noises going on about Russia and the Ukraine as well. That will spike to the upside if anything happens there. And also, if we do get that situation, you'll see the dollar spike along with gold as well. And that's why you're not seeing such a big sell-off in the gold market as silver, because there's the silver. You can see that moving lower because gold is a hedge in times of uncertainty, i.e. war, along with inflation, whereas silver has a manufacturing and a monetary aspect to it, and also manipulated, of course. So gold, you can see they're holding at the 38% retracement at the moment. So you'd expect that to be stronger, which is why, as I said before, that you've got the gold-silver ratio moving to the upside. I don't care. You can bring it up as high as you want. As I keep saying, I will certainly take advantage of any drop in the silver price and add to both physical and also the spread betting and also other forms of betting that you'll have seen in the new course, i.e. ETFs, etc. So yeah, do what you want, because one day it's going to go in the opposite direction, that's for sure. It has to. It can't be 60% cheaper. When gold has actually gone up twice, broken the record from its 1980 highs, is actually twice as high as the all-time high from 1980. And silver is 60% less 42 years later. You know that's manipulation. It can be none other. And also, when silver comes out of the ground, it's 7-to-1 ratio. Here you've got 80-to-1 already in that direction. Okay, finally, let's have a quick look at the pound and the yen for yesterday. I would grab the chart. And you can see that this is the GBP JPY, this trading up to the high yesterday and then selling off, and because the dollar's obviously got some strength behind it, this is now moving to the downside. We've also got divergence here, the market running out of steam, so a correction is on the cards, trading up to through the 89 and the recent high, but failing to hold there. So this is the sort of downside targets for anybody that's trading the currencies. Nice movements on the GBP JPY. We're at 38% there at the moment. Let's just have a quick look at the 30-minute. And again, you'll see yesterday that we were overbought at the BRN, crossover in stochastics, and potential weakness coming into the market here. Two crossovers actually, then we turn red, and the market has been lower since then. In the pound, let's have a look here. Again, trading up to the resistance to the left, just through it, just like the Japanese yen did, but again, failing to hold. And if we look inside of this, you will see exactly the same thing. We've got divergence. The market then trading up to the R3. We know the R3, 99% of the time the market will fail at this level. Crossover in stochastics. And there we've got the parabolic also turning red, and the market trading down to the 200 MA before trading down to yesterday's low, or the overnight low actually this is, as it's a currency. And again, the market will be attempting to try and trade off this low. It's oversold at the moment, crossover at the low, and we've got some buying there as well. So there we go. It's a bit of a long one today, bit of a whistle-stop tour, but it's going to be interesting. I wonder whether they will actually increase rates today. Going into a weekend seems a bit of a risk to me, because that would send the markets spiraling for the weekend. So I don't think, if I was a betting man, then I'd say no. But we'll soon see, won't we? I could be completely wrong, and like I say, I have to eat those words come Monday. Anyway, we're off into the weekend. Let's see what it's going to be like, what they leave us with at 9 p.m. this evening. And for those of you at new, thanks for joining us. And hopefully it's not too overwhelming. It's just that there's an awful lot going on at the moment. Have a great weekend. As ever, thanks for watching. See you in the next.